The dark side of money nobody warns you about. Money is one of the most powerful forces shaping human life, yet very few people are ever truly prepared to understand its complexities. From the moment we begin earning, we are thrown into a system filled with hidden rules, unspoken expectations, and dangers that can quietly drain our wealth. Schools rarely teach us how to manage it, families often struggle to pass down financial wisdom, and society bombards us with conflicting messages about spending, saving, and investing. The result? Most people live their entire lives chasing money without realizing how it can also control them. The dark side of money is not always about corruption or crime. It is often hidden in everyday choices, habits, and financial traps that seem harmless but slowly steal your freedom. Understanding these pitfalls is essential no matter where you live, because the same forces operate globally. Whether you're in the United States, Brazil, India, or Europe, the principles of finance work the same way. Let's uncover the truths nobody warned you about and, more importantly, learn how to protect yourself from them. The illusion of income growth. Most people believe that earning more will automatically solve their financial problems. It feels logical. If your paycheck doubles, surely your financial stress will disappear. Yet across the world, research shows that higher income often leads to higher expenses. This is called lifestyle inflation. In the United States, a worker who starts with $40,000 per year may dream of hitting $80,000. But when they finally reach that number, they often buy a bigger house, a newer car, or commit to expensive vacations. Suddenly, their costs rise so much that they are no better off than before. The same happens globally. A raise doesn't fix poor money habits. It often amplifies them. The technique here is simple but powerful. Treat every increase in income as an opportunity to build wealth, not expand expenses. Commit to saving or investing at least half of every raise before you even see it in your account. By automating this discipline, you break free from the endless cycle of lifestyle inflation. Debt. The silent master. Debt is one of the clearest examples of money's dark side. It presents itself as a friend, helping you buy a home, a car, or education, but it can easily turn into a master that dictates your every move. In the U.S., credit card debt alone traps millions of people in a cycle of minimum payments and high interest rates. But this problem is not exclusive to America. In countries from Africa to Asia, banks thrive on lending money at interest rates designed to keep borrowers paying for decades. The technique to fight debt is straightforward, but requires discipline. Always know the real cost of borrowing. If you charge $1,000 to a credit card with 20% annual interest and pay only the minimum, that $1,000 can balloon into thousands of dollars over time. Instead, create a debt snowball or avalanche plan. Strategies where you focus either on paying the smallest balance first for psychological wins or the highest interest rate first for mathematical efficiency. Both methods work globally, because the principle of compound interest applies everywhere. The trap of easy credit. In many parts of the world, banks and lenders aggressively market credit cards, loans, and financing options. They make it sound like an opportunity, but in reality, it is a business model designed to keep people dependent. In the United States, college students are targeted with starter cards before they even understand interest rates. In developing countries, payday lenders or microloans promise quick cash while hiding massive fees. The defense here is financial literacy. You must understand that credit is not free money. It is a product you are being sold. Use it strategically, not emotionally. Credit cards can be helpful for building a credit score or earning rewards, but only if you pay the balance in full every month. Otherwise, you are paying for the privilege of spending money you don't have. Inflation, the invisible thief. Inflation may not feel as dangerous as debt, but it is just as destructive. Around the world, prices rise every year, slowly eroding the value of money. $1 today does not buy the same as $1 10 years ago. In countries like Venezuela or Argentina, Hyperinflation destroys wealth almost overnight. Even in the U.S., steady inflation of 2 to 3% per year can quietly cut your purchasing power in half over a lifetime. The only defense is to put your money into assets that grow faster than inflation. Savings accounts alone cannot protect you because the interest they pay is often lower than inflation. Instead, look to investments, stocks, bonds, real estate, or even small businesses. These tools exist in every economy, though the specific forms may vary. The key is that your money must be working for you, not sitting idle while inflation eats away at it. The myth of financial security. Another dangerous illusion is the belief that a stable job equals financial security. Millions of people around the world discovered during economic crises that employment can vanish overnight. In the U.S., entire industries such as manufacturing have disappeared in certain regions, leaving once secure workers without options. In other countries, political instability or natural disasters can wipe out entire economies. The technique here is diversification, not just in investments, but in income streams. Depending solely on one paycheck is risky. Building side incomes, learning skills that can be monetized anywhere, or investing in digital opportunities can provide a cushion. The internet has made this more possible than ever, offering platforms for freelance work, online teaching, or global trade. The cost of ignorance. Perhaps the darkest side of money is ignorance. Not knowing how it works is more expensive than any loan or bill. Financial illiteracy causes people to overspend, undersave, and misunderstand risk. Governments and corporations benefit from this ignorance because it keeps people working harder without questioning the system. But knowledge is free. Books, podcasts, courses, and free resources online can teach anyone the basics of budgeting, saving, and investing. The global truth is that financial literacy pays dividends no matter where you live. 1 hour of learning about compound interest can save you decades of financial stress. The emotional side of money. Finally, we cannot ignore the emotional traps money creates. Fear, greed, envy, and pride often guide financial decisions more than logic. People overspend to impress others, invest recklessly out of greed, or hoard money out of fear. These emotions exist in every culture. The technique is self-awareness. Before making any major financial decision, ask yourself, am I being guided by numbers or by feelings? Create systems that remove emotion. Automatic savings, budget categories, or investment contributions that happen without daily decisions. By doing so, you protect yourself from impulsive mistakes. Conclusion: turning the dark side into power. Money is not evil, but its hidden dangers are real. If you ignore them, they will control your life. But if you confront them with knowledge, discipline, and strategy, you can turn money into a tool for freedom. Whether you live in the United States or halfway across the world, the principles are the same. Spend less than you earn. Avoid unnecessary debt. Invest for the future, and keep learning. The dark side of money is only dangerous when it stays in the shadows. Now that you see it clearly, the choice is yours. Will you continue as before, or will you take control? If this message opened your eyes, share it with someone who needs to hear it. And if you want to keep learning how to break free from financial traps, don't forget to subscribe to this channel, leave a like to support our work, and comment below about which financial lesson hit you the hardest. Your journey to financial freedom starts here, and the first step is awareness.